All right, so let's talk about different types of Japanese candlesticks. The first type of Japanese candlesticks we're going to talk about are called spinning tops. Japanese candlesticks with a long upper shadow and a long lower shadow and a really small body are called spinning tops. You can see it kind of looks like a spinning top, right? The color or directions of the body is not very important. The pattern indicates the indecision between the buyers and sellers. The small body shows little movement from open to close, and the shadows indicate that both buyers and sellers were fighting back and forth, but nobody could gain the upper hand. Even though the session opened and closed with little change, as you can see with the body, prices moved significantly higher and lower in the meantime. Neither buyers nor sellers could gain the upper hand, and the result was a standoff. So if a spinning top forms during an uptrend, this usually means there aren't many buyers left and a possible reversal in direction could occur. If a spinning top forms at a downtrend, this usually means that there aren't many sellers left and a possible reversal in direction could occur. And that makes complete sense, right? If it's trending in one direction and all of a sudden there's a spinning top where no one can really gain the upper hand, well, the buyers or sellers had the upper hand when it was trending, and all of a sudden with the spinning top, it shows us that no one has the upper hand, so it's probably going to start reversing the other direction. The next type of candlestick we're going to talk about is called marubozu. Marubosu is a pretty weird word, and honestly a lot of people pronounce it differently, but it means that there are no shadows from the bodies. This means that the bears, the sellers, or bulls, the buyers, had controlled the entire session. This usually implies that the market will continue in that direction for the time being. Or in other words, if the bears, the sellers, had controlled the entire session, they will probably continue with control and the market will continue to drop, and vice versa with the bulls having control and the market going up. So does that make sense? If there's no shadow and the candle is just the entire body like you can see here, it means that the buyers or sellers or the bulls or the bears had control the entire time. Remember a couple sections ago we had that image of tug of war? That's usually how I like to think of things. You can think of the sellers on one end and the buyers on the other, and they're constantly tugging at that rope trying to win. So it would have been as if through that entire tug of war game, the sellers were just pulling, and the buyers never stood a chance. Or vice versa, the buyers were just pulling, and the sellers never had a chance. So if that's the case, if there's a candle like that, it's most likely that the buyers or sellers, the ones that were pulling harder, are going to continue to pull hard and are going to continue to push the market the way that they want to. The next candlestick we're going to talk about is called the Doji candlestick. Doji candlesticks have the same open and close price, or at least their bodies are extremely short. A doji should have a very small body that appears as thin as a line. Doji candles suggest indecision or a struggle for turf positioning between buyers and sellers. Prices move above and below the open price during the session, but close at or very near the open price. So this means that neither buyers nor sellers were able to gain control, and the result was essentially a draw. So thinking of the tug of war game, it's as if the buyers and sellers are both pulling and they're just equal strength, and it ends up being a draw. Here you can see we have 5 different examples of doji candlesticks, since the length of the upper and lower shadow or wick can vary. When you see a doji, look at the candlesticks that formed before the doji. For example, if a doji forms after a series of candlesticks with long bodies that are going up, then the doji is telling us that buyers are becoming exhausted and weakening. In order for price to continue to go up, more buyers would need to enter the market, but there aren't any more. So sellers are ready to drive the price back down. The same is true with a doji forming after a series of candlesticks with long bodies that are going down. But this time, a doji forming would indicate the sellers becoming exhausted and buyers would be ready to drive the price back up. So you can see a couple examples here that we have this candle, very strong candle going up, and then the following candle is a doji where price basically opened and closed at the same point. You can see price went up and came down here, but ended up opening and closing at the same point, which means that in this case, the buyers here got exhausted and now the sellers are starting to push back. So a lot of times what you'll see is after this doji candlestick, the price will start moving down. So here you can look for a sell opportunity. The same is true over here, that if you have a long candle coming down, the sellers are strong, followed by a doji that opens and closes at the same price. That means that the sellers were strong, but now the buyers are starting to push back, which means you might look for a buy opportunity after this because now the buyers are going to start pushing back. In the next sections, we're going to look at specific Japanese candlestick patterns and what they're telling us. The goal is by the end of these sections and with some practice, you'll be able to recognize different candlestick patterns and you'll be able to make better decisions in the market based on them. So now that you have a good basis of different Japanese candlesticks, we're going to talk about putting these candlesticks together that form patterns and what that means. So we'll see you in the next section.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.